Welcome back to the Brent Bruce Daily. Today is Fed Day. We heard from the Federal Reserve today, and we need to talk about what that did with home loan interest rates, what we can pull out of the comments from Jerome Powell as to what to expect in the future. Today is December the 14th, 2022. It is now 4:34 p.m. Central Time. Later in the day, the bond market is now closed, so we are now able to see how the bond market ended the day after the Federal Reserve's announcements. But we don't know how they're really going to digest that information going into tomorrow after the knee-jerk reactions that occurred today. So what we saw was the Jerome Powell, who is the chairman of the Federal Reserve Committee, came out after they had a 2-day meeting with the chairs or the board members of the Federal Reserve, and they announced to increase the federal funds rate by 0.5%. Okay, I need you to listen closely. They increased the federal funds rate by 0.5%, increasing it from 4.0 to 4.5. That's kind of generally how we're going to look at that. So if we're now at 4.5%, does that mean that home loan interest rates went up 0.5% today? No, it does not. They are not adjusting and they do not control home loan interest rates, but they do control the federal funds rate, which is influential when it comes to where home loan interest rates go. And in fact, what we've seen in the most recent years is that when the Federal Reserve increases the federal funds rate for the purpose of reducing inflation, home loan interest rates actually go down. They get cheaper. So today, home loan interest rates went down. If you're buying a house, if you need a 30-year fixed mortgage, if you're looking to refinance, the interest rates went down today because the Federal Reserve increased the federal funds rate by 0.5%. Now, the reason for that is because we needed them to increase it by 0.5%. Number one, it shows that they're continuing to fight inflation, which is what mortgage-backed securities and bonds like. And that is what truly affects home loan interest rates. Number two, it was 0.5% increase, not 0.75% increase. So for the past, I think 3 or 4 times that the Federal Reserve has made this adjustment, they've increased the federal funds rate by 0.75% because they were being very aggressive towards bringing inflation under control. The fact that they only increased it by 0.5% tells you that they're starting to see the effects of the moves that they've made in the general economy, that inflation is subsiding, so they don't need to be quite as aggressive as they have been recently. Now, that is exactly what we wanted to see. But after the announcement came out, there's always a press conference with Jerome Powell. Again, he's the chairman of the Federal Reserve Board, and he gives a little bit more insight into what they're thinking and basically saying, hey, we see some signs that inflation may be coming down, but we are still going to be vigilant and that we will be aggressive in bringing inflation under control. They also mentioned that they may be willing to increase the federal funds rate by another 0.5% the next time that they meet if the charts and the statistics warrant that. Now, that was new because they basically previously had said that this last increase of 0.5% would probably be the last, or maybe there'd be 0.25% the next time they meet, which I believe is at the end of January. So what we need to read into that from the home loan interest rate scenario or from the home loan interest rate world and the housing world is that they're talking tough. So their words are different than their actions because you're talking tough, like you're still going to be super aggressive towards inflation, but the move that you made was actually softer than the move you made last time. Now, this is what I think is going to happen. The markets are going to digest this information overnight and into tomorrow, and they are going to land with the same thought process that I'm telling you right now, that they're talking tough, that they're saying, hey, you better watch out because we will increase the federal funds rate by a greater amount next time we meet if we need to. Well, of course, we all know that. But really, you only increase the federal funds rate by 1/2 instead of 3/4, which means that you are willing to make a less aggressive move, which tells us that at the end of the day, you see inflation is subsiding and that the work that you have been doing is now starting to take effect, which is exactly what we wanted to see. Let's take a look here at the charts. Okay, so there you go. There's the federal announcement here from the Federal Reserve, raises the interest rate a half of a point. I don't care that it's the highest level in 15 years. We're trying to fight some of the worst inflation in the last 40 years. And so far, I think it's going to end up working out. So let's take a look at our charts right here. We are up 17 basis points on the day, but we opened the day actually down. So we're in a pretty good shape here. Now, at this point, you're all probably getting pretty familiar with this chart that is put out by the MBS Highway team. So here we are going up and just about hitting this top Fibonacci level and being pushed back a little bit as we digest this information. And I believe we have a very good reason to believe that we will break through this Fibonacci level tomorrow and now be in a position to see home loan interest rates go lower than they have been in many months. The 10-year Treasury is down 2 basis points, not a big move there. Also fighting a floor of support that they need to break through if we feel after the consideration and digesting of the information from today warrants some improvement to the bond market. Home loan interest rates, what we really want to talk about. Let's take a look at the Brent Bruce Daily here and see what is going on with our 30-year fixed conventional, very well qualified customer, 5.99. So once again, the moves that have happened with the CPI report yesterday and the Federal Reserve announcement today being in line with what we wanted. Actually, the CPI was a little bit better than the markets expected, but what we expected. We're at 5.99%. So let's take a quick look, and I'm going to show you what you really need to know, though. So here is the scenario that we're looking at for compliance purposes. Everyone can see the numbers that we're talking about. But if we open this up, let's open up again. This is United Wholesale today. What if you pay a point? You are, paying a point these days, I mean, who's paying the point? These days, most likely the seller is paying the point. Maybe they're paying 2 points. Who knows? So if they're paying a point, they are at 5.625, guys. 5.625. We are now back into talking about the mid fives when you talk about paying a point that is probably paid for by the seller because of the aggressive nature of the market today. It is more of a buyer's market, right? It's getting closer to that. Good news that we're at 5.625, and hopefully we'll be talking about 5.5 maybe by the end of day tomorrow. So let's take a look over here at the government loans. FHA, VA, USDA. Let's pick up at FHA, very well qualified, 30-year fixed also. Same scenario that we're looking at here. I mean, just a very well qualified client, but we know with FHA, you could probably go to a 680 FICO and probably be about the same. So right now with no points, 5.5%, FHA, 30-year fixed, 3.5% down, 5.5%. Let's open this up here. What if you're willing to pay a point? Look where you're at. I mean, for 1.2 points, you're at 5.0. For just over a half of a point, you are at 5.125. Guys, we are going to be talking about the fours with a point very soon. And hopefully, as my prediction is, that we will be looking at 4.875 on a 30-year fixed conventional by the end of June. So by July 1st, we will be celebrating the 4th of July with interest rates with no points at 4.875 is my prediction. So what needs to happen? Number one, the Federal Reserve needs to basically either make their last move of a half of a percent increase. Maybe the next time they meet, they kind of meet in the middle. They make the hawks happy and the doves happy, and they increase the federal funds rate by a quarter. But if the reports come out for the PCE, the CPI, and the PPI, as we expect, showing inflation subsiding, then we are well on our way to accomplishing our goal of seeing the fours on the Brent Bruce Daily. I mean, shoot, it might be well before July the 1st. So good news, that's where we are today. I will get back with you tomorrow as we find out what the markets in general, especially the bond market, feel about digesting the information of today. I think they're going to like it, and we'll see improvements today, but we'll see. I'll get back to you again tomorrow. We'll talk to you then. Make sure that you like, subscribe, share, and let me know what you think. Give me some comments. Do you agree? Do you think we're going to be at 4.875? Let me know.